Morning, you're watching us here on Chartbusters. It's been an interesting morning, so to say. The Nifty opened with a gap up. We saw a bit of a sell-off, and now we are, inching again with towards that 17,100 mark, up almost 95 points. At the same time, the mid-cap index doing well. The Nifty Bank, however, seems to have come off the highs. I'm Manglam Malu, with me, Ekta Batra. Ekta.
Hi, Manglam. Yes, absolutely. There's some amount of retrieval. Remember that we did break those 5 days lows or losing streak for our market. So there is some amount of follow-on buying which is taking place today. At current reckoning, the Nifty on a week-to-date basis has lost less than 2% and the mid-caps have lost less than almost close to 2%, 1.7%. So let's see whether there is any kind of building on gains from these current levels, and we could probably reduce our losses on a week-to-date basis. But nonetheless, let's shift focus now. KPIT Technologies is the stock that is in focus. The stock is up around 5% today on the news of a tie-up with Honda to power their software-defined mobility roadmap till the year 2030. This comes on the heels of a software-defined vehicle space deal with Renault, which they signed in the month of November last year. We have with us Kishor Patil, who's the co-founder, managing director and CEO of KPIT Technologies, joining in to discuss all this and more. Mr. Patil, welcome to the show. Well, if you could just start by giving us a sense in terms of what the opportunity would be from Honda, and what does this mean for your entire SDV or software-defined mobility segment?
Yeah, so good afternoon. I think the only first thing is we have been working with Honda for last 6-7 years, and basically we have been involved in terms of working on projects and programs in different areas, including autonomous, etc., connected infotainment, etc. So here, when as we call, all the OEMs are moving towards software-defined vehicles, or as Honda calls it, software-defined mobility. This program was being undertaken by Honda. They thought that they would need a partner, kind of a long-term partner. And based on what we have worked with them together, there was a mutual trust, there was a mutual confidence and respect. I think based on that, this long-term relationship is formed. Basically, this is all encompassing kind of a partnership. So most of the all domains will be there, and basically we are in it to make software-defined mobility as a success for Honda. So to your point, what we have been saying is for most of the OEMs we work with, we are and we have a very significant programs, about 7 now, in terms of software-defined vehicles. These programs will pan out more towards a long-term relationship, multi-years engagement with them. And now the way approach Honda has taken is something makes more sense, because the OEMs would like to work with few chosen partners where we are very well positioned for 2 reasons. One is the expertise and the skill we bring to the table. Second, the long-term relationship we have with most of these OEMs.
Could you give us a sense of the kind of size of this deal? Just wanted to understand the scope of the work out here, the kind of margins that you will have. Renault, as we remember, was $100 million plus deal.
So there is no numbers attached to the deal. Okay. This is a long-term deal, but I may just, I have said that it's basically 2,000 people plus relationship by 2030. This year, we were expecting about 900 plus engagement. This includes some of the current engagements we have. We would not like to give specific details, but it is significantly higher than what today's engagement is naturally. I have also mentioned that this is the largest engagement we would be undertaking for software-defined mobility till we have signed.
Okay. How is Q4 looking or panning out? Sir, if you could just give us a sense, is there any kind of slowdown that you all are seeing? Is your guidance intact for FY23?
I would not like to say it. I have been saying it that the market is good, the opportunity is good. I think we are announcing significant partnerships. So I think there is nothing which has changed than what I have said last quarter, last year. So everything looks good. I think last quarter only I had mentioned that there will be two significant, as I said, mega engagements we will discuss. And this was a second one, which we had talked about. So I think everything is in line with what we have been talking about. I have also said that not necessarily every time we are going to announce these things, because these are our existing clients and many of them will also grow organically. So in line with that, I think we see a very positive business environment.
You said that, it is the largest SDM deal in terms of employees staffed. Could you, give us a ballpark? How big is it versus all the other deals that you've had? Is it 1.5 times, 2 times? Renault was about $100 million. I ask this again mainly because, you're talking about the size, it being the largest.
So I think it's a joint announcement in some certain way. We have made an announcement, Honda has made an announcement, and we have chosen to keep it like this. I think every 6 months we will take a review about how additional engagements may be required, and we will revise it. I think you can take a guess on that based on both number of engaging number of people. Also, I have also mentioned that this is the largest, so you can take a fair guess on this.
Let me try this another way. Mr. Patil. The last quarter, your total contract value was $272 million. Average has been close to around 140, 150. Last one was, of course, aided by the Renault deal as well. What kind of TCV are we expecting in the fourth quarter, including this one?
Let's wait for a month. We will announce it at the time of quarter. I think let's announce. I think the good part, what I wanted to say is there are 2-3 key takeaway from this. Number one, as I have been mentioning, that there is no slowdown in terms of the spend on software-defined vehicles. That is a point number one. Point number two, that these are long-term multi-years engagement. There will be a lot of concerns even last time when I spoke on CNBC, and some other analysts also had that kind of a concern whether this kind of spend will get deferred, whether that will be there, whether multi-year contracts will be there. So I think this basically put to rest at least in one significant way. That is something you can take away. And third, I have mentioned that this is the largest engagement we have. I think the rest, I would say that at the end of the year, we would of course talk about the quarter and the year going forward.
Okay. Mr. Patil, I just wanted your thoughts with regards to what's taking place in the IT industry on a larger scale as well. There have been leadership changes which have taken place at TCS as well as TechM. As an industry veteran, your quick comment.
No, I think this is a part of the process. It will continue, but I think overall the business requires, business is going through changes. I think there are significant opportunity. India is very well placed in terms of both expertise as well as skill. But the engagement models are changing. The technologies are becoming complex. I think from that perspective, there will be changes. I think everything is good actually from that perspective is what my feel is.
All right, Mr. Patil, thank you so much for joining in.
Thank you.
We tried our best to get some numbers out of you, but you're saying this is the biggest, so we'll hold you on to that, and at the same time await your fourth quarter performance as well to get some more granularity into this. For now, the street likes what you've done. The stock up 5%. Take a short break, come back. We have with us the management of NBCC, Pawan Kumar Gupta, who's the chairman and managing director, waiting by to discuss their recent order wins and the outlook going forward.